The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648, and this is the Futures Hour. And I'm going to give everybody listening a homework assignment this weekend. It might be a little difficult for some of you living in remote places to fulfill it, but there is a movie that was done about 35 years ago, gosh, it might even be 40 years ago now, with Chris Christopherson and Jane Fonda called Rollover. And it is really, it's really apropos now. The situation's pretty much the same. The gold was in the movie approaching $2,500 an ounce, but it's about the rollover of debt. And I think it's one of my favorite movies about Wall Street stuff, and it's very, very good. It's intriguing. And for you younger guys and girls, it has a little bit of the SEX in it. Not much, just a little hand-holding, but at least it keeps the interest alive for you younger folks. But it's got a great theme, and it's a terrific movie. It's one of the movies that I keep in my library, and I've watched it many times, and I'm going to watch it again this weekend just because of all the things that are going on in the world at the particular time. I wanted to focus a little bit on what Tom and Steve focused in their shows, and that was about making mistakes. And really, folks, we make mistakes all the time. There's an old Chinese adage that says the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And that's what you do when you read books and watch other people do things. You try to learn from the mistakes that they don't make. Golfers do this. Athletes do this. Professional gamblers do this. Just about anybody that's in a competitive nature tries to follow, what the right person is doing and what the wrong person is doing to, build a structure, that fits within the realm of what they're doing. And that's what you're doing when you're trading, is you're trying to make less mistakes than the other fellow. We're all going to make mistakes. That's not, you're never going to be mistake-free. Just forget about that. But what you can do is mitigate those mistakes. And remember Roy Longstreet, who was a great soybean trader back in the 60s, who I was fortunate enough to meet, and I still know his son Bill. Roy was one of the greatest soybean traders of all time, and he had a huge ranch down in the South, and he named it Ranch Royale. And his favorite saying was, the first mistake teaches, the second mistake kills. And that's really true. So you stop and think about it. You can put a bad trade on, and that's your first mistake. Your second mistake is you don't get out when you should. You forget to put a stop in. You don't manage it properly. That's the mistake that kills you. So try not to make that second mistake. That's the real key to what we're doing. I think I'd like to start today with what happened yesterday. Yesterday is an outlier event where everything goes up and it just keeps going up and up and up. That's a very strong trending day. They don't happen very often, less than 10% of the time. When they do have certain characteristics, and these characteristics are relatively important. They're not having the same characteristics today like we did yesterday. First of all, the market opens up with a huge gap, just runs real fast. I mean, just up like the Dow opens up 20 and then it's up 90. And then it stalls for a little bit, but there are no corrections. Not even just a few points, maybe 3 points in the S&P, something like that. And it just keeps going like that for the first hour, the second hour. And the farther you are away from the opening, the more important it is that you're probably having a strong trending day. Now, when you have that first hour going up strong, start to watch for the corrections that occur. There will be corrections because there will always be people selling into strength, thinking there's going to be a top that day, and so they're going to try it, and they're going to back off a little bit, and you'll see 3 or 4 or 5 of these small corrections all during the day. Those will be your buying opportunities, or you're covering your short position if that's the position that you're in. But you will see 4 or 5 of these. Every example that we have of these strong trending days has these characteristics. Now, in the stock market, when you see advanced declines, 4 to 1 is actually very strong. But when you see them like they were yesterday, 10 to 1, it's almost impossible for that market to turn around. Now, today, we don't have that, and we could turn around today, but not yesterday. Yesterday was one of those real crazy things that doesn't happen very often. It's an outlier event. It's called a strong trending day. It happens 10% of the time, and if you'll watch those 3 characteristics that you have the big, wide-ranging opening, okay? Then you're going to have the first hour is virtually no correction at all. Then you'll start seeing a few small corrections that will be equal. They'll be anywhere from 3 to 5 or more a day, but they'll all be about equal. And none of them will be more than that. In other words, the first correction is 5 points. The second one will be 5 points. The third one will be 5 points. It'll just in that rhythm for that particular day. So keep in mind when you see that's what you're going to. And the fourth thing is to watch the advanced declines. And anytime you're over 4 or 5 to 1, you have a tendency to have a strong trending day. And at 10 to 1, you have a strong trending day. That's just flat out all there is. The market we were watching yesterday was the S&P, the futures, and also the S&P in the cash market, and we reached our objectives. Yesterday, I said we could get to that 1,200 level. Now, there's been a rollover, so we've gone from the September contract in the S&P over to the December contract in the S&P, and the December's trading at a little bit of a premium. So you just start trading the December. It makes no difference. The patterns are going to be the same, but you'll be trading December contracts from now on. So that's a factor that you have to keep in mind. I got a lot of emails about the possible trade that I think is going to be the trade of the decade in bonds. It's not ready yet, folks, but believe me, I'm watching it like a hawk. The other thing that I'm watching really closely is a trade that Steve just finished with at the end of his program, and that's gold, because we have a really nice sell-Gartley pattern coming up in the gold market. Up in that 12, I should wish, the 1878 to 1875 area, and that would take with about a $20 risk if you get the opportunity to take a look at that trade. So that's a possibility. The reason why I'm looking at that, of course, we've already talked about the open interest in the gold and silver is dropping along with the volume, and the GLD, that has been going up, and that's the people that are less sophisticated than any of the futures traders that are usually out there. Now, and I say the sophistication is because the GLD traders don't trade nearly as much as the futures traders, and I don't know whether that's a good thing or a bad thing, but at least with more trades you get a lot more experience. That's the main thing that you'd want to be watching to see if that is in fact going to happen with this particular trade. I think that we're very close, to a top in gold, but the problem is if the Euro does give up, and we're getting down there, we're almost below 39 now, 139, and if it does give up, then all bets are off, folks, because that's the whole European Union, and Germany does not look like they want to be in there, funding the whole thing, and other countries are, wavering also. So it's very hard when you got 20 different entities out there trying to do the same thing with one currency, and they have one central bank but with 20 different interests. It's a real quagmire. Remember, when this thing started in 2000, I believe it started at about 135. It went up to 160 in the euro, then went all the way back to 85. That was back in 03, I believe, and then it went from 85 all the way back to 160 again, and then back down to 114. So it's had some incredible swings. And, we're going to continue to get these swings just in everything, not just in the things that we're looking at, because we're having, wild volatility everywhere, including the commodities, and that's what we're going to be talking about today. So I do want to mention here about the stock market. We've had the bottoms come in. They've been higher bottoms. They've stopped exactly at the 618 or 786 on the S&P and the NASDAQ. The key number to look at, folks, is 1080 in the S&P cash or the S&P futures are close enough. Either one. It happens to be that August 9th low, And keep that in mind. You know, we're into the a whole month now, because today's the 8th, and we made that on the 9th. So we're going right into that low. Now, remember, folks, I want to remember a little bit about my college education. Vaya con Dios means goodbye in Spanish. Au revoir means goodbye in French. Zaijian means goodbye in China. Hasta luego means goodbye in Venezuela. And going below that August 8th low is goodbye in any language, because we are going to the stalls. We're going to the trenches when we go below that one. And we might go there very, very fast if, in fact, it does happen. Nothing is bearish until we get back below that. It's not looking too bullish. You know, we had a big day yesterday, but if we get below that August 8th low, protect yourself, protect your 401k, and because I think we're going to have a real steep down. It's going to start in Europe or Asia. It won't start in the United States, is my opinion. But it's coming. The charts of the world are telling us that there's something wicked out there. I don't know exactly what it is, but it is coming. And so just keep in mind, remember, the October area that we have has got some really nasty, that's 6 weeks out, but that's got some really nasty astro stuff that is usually indicative of bottoms. So August 9th, that date, I believe we hit 1080 in the S&P. I believe the Dow was at 10,000 and change. So just keep in mind, circle your charts, and then you'll be able to, you'll see if that is in fact going to be the real case of how they do these things. The other thing that I wanted to mention that I heard on the Tom and Steve's show is about, you know, how people, you know, when they do things, you know, they have to work for themselves and do things, you know, a little bit differently if they work for people and they have a nice job and a nice boss and stuff like that. But folks, if you work for yourself, you know, you're working for the most ruthless boss in the world, because you're the one that determines how many hours you have to work. One of the reasons China and Hong Kong and the Asian countries are so productive and they live off, you know, very little money is because they don't work a 40-hour week, folks. They work a 50, 60, or 80-hour week. They don't live in 3,000 square foot houses. They live in 300 square foot houses. You know, and it's really, you know, the diet that they have, they eat, you know, a lot of rice, they eat a lot of chicken and fish and things like that. But, you know, they're not eating the red beef and all the sweets and the colas and things like that. So, you know, their diet is better. They're working a lot harder, so they are more productive. And that's why, and they save, my God, they save as much as 5 to 10% of their money. So that's why China has been able to build up these tremendous reserves by, you know, having low wages and high productivity and a great savings rate, because the standard of living is way down, you know, from everybody else. So the soapbox days are over at the break here. That's my last little soapbox. I hate to think what it's going to be like when we get to the election, because I'll probably be worse than Jay Leno. I can't be that bad. Okay, folks, 877-927-6648. We'll be back in just a bit. Call in if you have any questions.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and because we have these things called Tiger TV, you'll be able to see some of the charts that we're posting, but on Wednesday's show, I talked about what I thought would be the trade of the decade in Treasury bonds. I'm not going to go into that today because we're not close enough to it yet. It's just that the pattern is setting up, but there is another one that has the potential to do not the trade of the decade, but to really be a big surprise, and it might come very, very soon. I'm not sure whether it's going to do this or not, but all I did was I posted into the den a long-term chart of the dollar versus the Swiss franc, and the dollar versus the Swiss franc has been dropping and dropping and dropping for years, and then this past week the Swiss franc basically devalued, and the market reacted more than 10%. In other words, if you had $100,000 in Swiss francs, when you have your Swiss francs now, you now have 90,000 Swiss francs versus your dollar. Now, there's another market that looks very similar to that. What I'm going to do is I'm going to do a comparison chart of the Japanese market long term. I'm going to go back at least 6 years, and I want you to see this pattern, and it's worth looking at it. So come into Tiger TV today and take a look at this on the program, and you'll see the long-term chart that goes back through 2005 to where we are now. It has some pretty nice 48-week cycles in the yen, and the yen is laying there on its bottom just like the Swiss franc was just a few days ago, and we're expecting a very strong move to come out of this area here. Now, why, I don't know. The fundamentals certainly don't support that, but they didn't support that with the Swiss franc either. So, no one knows the fundamentals. At least the people that do are not telling us. I'm just a technician, but if you see that the correlation between the Swiss franc and the Japanese yen has been very, very strong for 6 years, and now that correlation has broken away, that could also mean that the Japanese are getting ready to do something to help stimulate their economy. They might make the yen less valuable to stimulate exports. In other words, if they drop the price of the yen, cameras and automobiles will become cheaper and people can come in and buy it. But I don't know. I'm just saying that this chart is worthy of a potential long position. You have a 3 drive to a bottom pattern that has occurred, and it actually is in this 4th bottom. And but the cycles are there, the patterns are there, the ratios are there, the numbers on the AB equals CD on this particular one. When we look at it on a daily basis, and we've done this several times, we're going to do it again because it was such a really interesting one to talk about, because we had the things with the full moon and the what was the other thing? Oh, that tsunami that they had was really big, and we were looking for a test of the 76 level on the AB equals CD pattern, and it did exactly that. And it's just been it's doing everything we want it to do cycle wise. It just hasn't moved yet. It's moved about not quite 100 points away from where we were buying it. So now the AB equals CD measured down to 76.44, and we're trading at 77.41 now. So it's moved 41 pips, but remember that it can move very, very quickly. If you'll go back and when you look at this chart, when you get into Tiger TV, you'll see that on August the 14th, the 11th was actually the earthquake, I believe, and on the 14th we had a move that went from 76 to 85. That was a $9,000 move, and then it went back to make new lows. Now, maybe the Swiss franc will do the same thing. I don't know. But the fact that when you get these big moves like this and the pattern is there, and you're able to catch that $9,000 move in just a few days, those are life-changing events, folks, because they reiterate the fact that these patterns do work, and the fact that you can prevent your risk from being way lopsided from what you're trying to gain. So you're risking here about 80 pips to make about 800, and that's 10 to 1. I don't know if it'll work or not, but it would really be the one that you'd want to be able to take a look at. But it's down. We're at record levels, almost just off record levels in the yen versus the dollar. So it was the same thing pattern that we have with the Swiss franc. So all I'm saying is, I'm not telling you to go out and buy it. I'm just telling you to go out and watch it. But if you do go out and buy it, put your stop below 76, and if it goes, it should go really good. And if it's wrong, you'll take a small loss. That's just the bottom line of what we're looking at. So if you have any questions, folks, the number is 877-927-6648, and it makes my job a lot easier when I do get questions, because it's very important that I can make contact with you folks. Now we've got to pay some bills. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we have a lucky winner residing in Sarasota, Florida, one of my favorite places in the whole world, right next to Longboat Key. Are you there, Don?
Yes.
How are you today?
Pretty good. And yourself?
The jury's still out on that, but it's I think it's 6-5 with one outstanding vote not cast yet, so we're still waiting.
Well, that's good. Sometimes those deadlocks are wonderful. I have a question for you. You were talking about the yen. Now, if one were to go long, he could possibly use the YCL, or if they were to go short, they would use the YCS. But I really didn't understand the chart there.
Basically, what that chart says is that the dollar should start gaining to the yen. In other words, the yen should start coming down against the dollar. That's what that chart is saying. And with the red line over the chart, it's basically showing you what the Swiss franc did, and you can see that there was a very high correlation up until a few weeks ago. So all I'm saying is that the patterns look very similar, and it's worthy of a look-see.
Okay, so therefore one would want to short the yen.
Yes, sir. Short the yen. I think it's up in the 230 area, 226. I'm not sure the exact area because I use the dollar versus the yen, but I believe it's in the 220 area easily, and it hasn't been that. That's all-time high. So you're way up there.
Okay. Very
but
good.
make sure you use a stop, okay, Don?
Yes.
All right. Okay, thank you. All right, we got a call from Denver, Colorado. Fred, are you there?
Yeah. Are you there, buddy?
I think so. How are you?
Hey, thank you. Listen, I had a question. I heard Tom refer to the Tiger-Gartley pattern possibly happening, futuristically, like within the next month, especially in September, October, for shorting the S&P or the Russell 2000. I just wanted to know, what should I look out for in terms of not doing that too soon? What am I going to look at?
You mean in case you miss it?
Well, last time I really thought I had it, and that only occurred a couple weeks ago or a week ago or whatever. Mm-hmm. But I thought, boy, it's got to take a little bit of time for it to get going again. Does that make sense? I mean, to where it rises up to a certain point, and then you want to make sure you hit it going down short, especially with all the warnings that you were issuing earlier about September, October. What would I look for with volume and price to be a good short on the Tiger-Gartley pattern going down?
Well,
am I making sense on that one? For the S&P or the Russell 2000.
Okay, let's focus on the S&P. We had a pretty hard down day into the holiday, and then the market reversed and rallied 3%, and we went up to the 7.
Yeah, thanks for pulling that up.
It went up to the 786 retracement there, and so today's high is very important. If we don't take out today's high, and now we take out the low that we made last Thursday, before we went into the holiday, then that means this market is going to go down and probably go down sharply. By the opposite side, if we take out the high that we made today, we'll probably go up into the 12th, which will be the full moon, and then we'll take a look at that. But that's how it looks like right now. You're in a real tight channel that is getting ready, with down-sloping channel, by the way, because you have lower tops and lower bottoms, so it's a pennant, with the longer trends are actually down. So the probability is for it to go down, but whether it will or not, it's about a 75% probability. Stay with me, and when you come back, I'll try to answer one more question that relates to volume.
Thanks, Larry.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
See, what we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Fred in Denver. Fred, are you still there?
Yeah, I am. And Larry, thank you so much for giving me this education. Appreciate it.
Well, I hope education is worth what you pay for it, my friend. Anyway, here's what I'd like to suggest. If we go below the low we made yesterday, which is around 114, I believe, in the cash S&P, it's about roughly 5%. So if we have a 5% down move between today and tomorrow, you do not want to be long stocks. I posted into the den that the Tiger TV people can look at later, the Dow Jones Transportations. And if you want to see an index that had been leading the market all the way and made a major top, had a tremendous break, and is not rallying at all, this is another really nasty sign. So, the question of how much volume we're going to get here is, I don't know. Tom's expecting it to be, less volume. Maybe it will be, maybe it won't. I don't know. But the pattern is saying, unless we get moving here really fast to the upside, this market's ready to roll over again, because we've been in a consolidation for a month, since August the 8th, and today's the 8th. So this is just a sideways action getting ready to roll over. That's my assessment.
Okay. When you say it can happen pretty quickly, sometimes you only have a day or two in advance, huh?
Usually within one day. Well, like yesterday, if it was really good yesterday, this market should have powered through and done exactly yesterday what it did today, and it didn't do that. Today is just chopping around, doing nothing, going back and forth. So it might take off later, but right now it doesn't have that same power. The buyers that were there yesterday, they're not buying today. That was short covering yesterday.
Larry, thank you so much. And,
my pleasure, Fred, and keep the calls coming in.
I do look forward to whenever you're on. Thank you.
Okay,
so much.
Thank you so much. Okay, and we have another call from, I believe, Dave in Denver. Are you still there, Dave?
Yes, Larry.
What can I do? What can I do for you?
Well, I think you've kind of answered the question that we all have. But what I was looking at was the euro this morning. It seems to be wanting to break again.
Yes, it's breaking badly all day. Yes.
Yeah. Now, is this a going to be a sign of the spider or the S&P breakdown? If that breaks?
There's been a pretty good correlation between the euro and the S&P. Yesterday it wasn't too much, but usually it is. But it's its own entity, because remember, you're looking at a currency that represents, I believe, 22 countries in the ECU. And so that's basically a currency that you're looking at. The S&P is, the 500 stocks, but they're all interrelated. We live in a global world. That's one of the reasons why I'm so very bearish, Dave, is because if you look at the stock markets around the world, they have, they've broken very badly. I mean, for the DAX to be down 28% in 1 month, that's the fourth largest economy. These people make BMWs and Mercedes-Benz, for heaven's sakes. You know what I mean? They're not making Yugos and some of the other cars that they make in China. These are fine automobiles, Porsche, for heaven's sakes. I mean, when they're having trouble, something's wrong somewhere. If you look at China, they're having trouble. You look at Hong Kong, they're having trouble. Something's wrong somewhere. I don't know what it is. All I'm saying is these charts are saying lower. I hate to get on my soapbox, but I'm really bearish. I'm more bearish than I was in 08.
And now I'm at this point where it's a very tough trade with President Obama speaking tonight.
Oh, no. Let's clear the air here. Whatever he says is not going to make any difference because he's not going to be telling you what he's thinking.
No, but it's only going to make a difference for an hour.
It's only going to make a distance for an hour or so. Just watch the charts. All I can say is once we go below August the 6th or the August the 8th low, it's going to be very, very rough. If you were with us back in 2008, Lehman Brothers had already given up the ghost. That was in September. And everybody thought the bottom was in. Bear Stearns was already gone. And we were coming into October the 8th. At that time, and I said, I was on the show with Tom. I said, Tom, here comes the big down move, and everybody said, no, it can't. I believe the S&P was trading at, I think 1063, 1123, something like that. But it had been there 3 or 4 times, holding that low, much like we're doing here. And once we went below it, it never upticked after that for I think 60 S&P points. It just dropped like a rock, and I think we could have that happen again if we go below that August 8th low.
Oh, right.
So just be careful.
Yeah.
Well, all I'm saying is be careful, my friend. I'm wrong a lot, but I'm right once in a while. So this is one of the times that I think I could be right. So just be careful. And if I'm wrong, that'll be good for everybody because all their assets will go up. And, I'll eat a little bit more crow and get a little chubbier. But, that's the way life goes.
We may be all eating crow soon. Okay, thanks, Larry.
If the price of corn gets higher, you're right. Thanks for calling in. We got a call from John in Florida. Are you there, John?
Hey, Larry.
How are you? I'm good, thank you.
Arrivederci, that's goodbye in Italian.
Yes, that's for sure.
There you go. Missed that one earlier. Hey,
yeah,
I had a question on the SLV.
Yes.
Now, what I've done the last few days, just 4 or 5 days, I've scaled in very small amounts on a short because I can't quite picture where this is going, and I'm got to stop it around the 42.50 to 43, which was the recent high on it.
Is the SLV? That's the ETF for being in silver, right? Is that the
right? Yeah, the silver chart.
Okay. Oh, the silver chart. Okay. Well, there's nothing wrong with that. Let me pull this up here for you quickly because I know silver. What I would do. 42.17 is the 618 of this thing, but 44 is the 786 of this. I don't know if you want to risk between 42 and 44 how much dollar amount that is.
I can. Actually,
okay,
yeah.
then I would have you stop. I would have you stop just above. Just right at 45 is where I would put it. So that would be 3 points on that. So that would be just about a 3%. So that's an effective trade.
Okay, great.
Yeah, that looks good.
Okay, excellent. Yeah, one quick thing on Germany. If I read correctly, they also make a lot of machinery that go into factories, and they sell a lot of that obviously to China. And
yes, they do.
Partially what's going on. See why they're slowing down. They're probably not getting the orders they were getting in the past.
Well, when they sell them to China, China copies them and makes them cheaper.
There you go.
Okay, thanks for calling in, John. I appreciate it.
Thank you, Larry. Take care.
Okay, 877-927-6648.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million and you have a FICO of at least 720, then Everbank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, Everbank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Hi, folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, we're back, folks, and we have Steve from New Jersey. Are you there, Steve?
Oh.
Hello?
Yeah, hello?
Hi, Steve. Are you there?
Yeah. Can you hear me?
I certainly can.
Okay. I had a question about the E-mini. Are you using, the September contract? It's ran into resistance around the 1203 level.
Correct.
Over the last 10, 12 hours. And I didn't know if is there a resistance level up there? Because I think the 618 fib is down about 10 points below that.
Yes. Well, what I'm looking at, because of the rollover in the contracts, I'm looking at the cash, because the cash is real money. It's no leverage, and I posted that in there. That cash number comes in at the 618 at 120.06, and we're trading at 120.25 right now. And, we could get 1 full point higher up to the 786. That would be a 3-day rally. But this is, to me, a very strong, flag or pennant that is forming now. And if we break the downside of this, we have a long way to go to the downside. And if we pop up above the 123 level, which would be above 1232, I believe, in the futures, then it could go up to the next level. But, that's just another setup for it to go down. But it's just a question of whether it does it today or the 2 days from now or 3 days from now. We don't know.
So you consider this resistance basically at the 6?
Yeah, sure. Well, first of all, we stopped right on the holiday. We stopped at the exact 786 of the August 22nd low. We stopped at the exact 618 of the the August 9th low. So you had both of those lows coming in. They were both cyclically perfect. I mean, the market was as symmetrical as possible, so you expect to see a rally. And what do? You get a tremendous rally of 275 points, 3% in one day in the Dow Jones and 2% in the S&P. And if that's all they get and it starts to go down, that's when the real problems are going to happen, because the market was so oversold, that we were coming into that.
Right. Well, at least it bounced 618. I mean, that's a decent bounce anyway.
Oh, sure, and it could bounce more too. You could easily get to the the 125 level. There's nothing that says you can't. I mean, we've got the full moon coming in on the 12th, and also, folks, let's just take a break here. Remember, we got the 11th coming up, and everybody say a little prayer, because that was a bad day in the history of our country. That was as bad as Mr. Lincoln getting shot and Kennedy and a few of the others, but. That was really bad, because all of our freedoms that we lost. I hate to get off on a tangent, but I wanted everybody to make sure that they say that little prayer, Steve.
Okay, well, thanks a lot, Larry. And I'll
you
let
bet.
You go.
Okay, thank you. Remember now, try to get that movie called Rollover by Chris Christopherson and Jane Fonda. It was done in, I think, 72 or 75. It's a great movie, and it really depicts what's going on, with debt and stuff like that. A lot of intrigue, and I think you'll enjoy it very much. And then also be sure to say prayers on September the 11th. Try to help someone, even if they're not involved with September 11th, someone that has less than you. Do something for them. Buy them a meal, give them a few dollars or whatever it takes to make them happy. Try to do that, because they have a lot less than you, and you want to share the wealth, because I can promise you one thing, dudes. You and I and Buffett and Gates, we leave the same amount of credit down here as when we go up, and we ain't taking any cash with us. That much I can promise you. It doesn't make any difference. So live fast, love hard, die young, and make a good-looking corpse. And I'll see you on Monday, God willing.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa, with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010, with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.